Alright, so why are we in a depressed economy?
A lot of different reasons. Property values have declined. Lending is dried up completely. Borrowers are in trouble. There's no lending for the small business owner anymore. Property values have declined. I mean, there's a lot of different things that are going on.
Why do you say there's no lending for the small business owner?
In 2008, when the market collapsed, lending for the small business owner really vanished overnight. Literally in about a month, all of the major wholesale commercial lenders, aside from the names that we know, brand names like Bank of America knows, everyone behind the scenes all fell at the same time. So literally there was like a lending freeze, and then that was it for years. So the small business owner has just been kind of shut out for now.
Like why was there a lending freeze though?
Because
why were they not able to lend to that small business owner that needed help?
What had happened was it all started with residential mortgages. So residential mortgages got so out of control. We were lending, and I'm not a residential guy, but when I say we, as lenders, the residential mortgages just got out of control. They were lending 100% financing, interest-only loans. Literally, the lenders were almost paying for people to buy houses that they couldn't afford. So with the type of programs that were coming out, the interest rates being low, you could literally get into a house with no money down.
Like what time period was this happening?
This was 06, 07,
Okay.
up until 08. So what had happened was you have somebody who's looking at a $300,000 house or an $800,000 house. The residential mortgage programs morphed to the point where you could afford the same that day. So here's a $300,000 house, or then you have a McMansion for $800,000. You have somebody who's going there. They have their wife is pregnant. They're very impressionable and they're young, and they're looking at this big glorious house, and they're looking at that payment, because that's what the lenders were doing. They were selling payment.
They do the same thing with cars.
Yeah, so they were selling. Yes, they were selling you payment. They were like, forget about the interest. Forget about 2 years from now. Here's the teaser rate.
Yeah.
So what happened was people ended up buying that $800,000 house, and what they were thinking was, in 3 years, when this thing changes. I mean, think about it. The guy's thinking, oh, I'm going to be a partner in my firm in 3 years. My wife is going to be tenured. In 4 years, my kid will be out of daycare. So yeah, we'll take this introductory rate today. And that was all fine and well if the market had kept going like this.
Yeah.
Well, what happened was it didn't. So people started losing their jobs. And then all of a sudden, in a year or 2 or 3 years, your payment of $1,000 became $5,000.
It can balloon like that much?
That fast.
Really?
Absolutely.
Well, I don't understand. Like, why would you sign something saying that my payment's going to go from $1,000 to $5,000?
You
just
did,
to get into that house?
You exactly.
Okay.
Yes, and you're thinking, okay, even the worst case scenario when this thing does what it does, I'm going to be making double, or you could sell my property, because everybody's thinking, okay, even if we get out of over our head, we can sell this property. We can get out. Well, wait a minute, your payment went from $1,000 to $5,000 overnight, like literally overnight. And oh, by the way, the property's not worth what you paid for it. So there is no out now. And this is why a lot of America has thrown in their keys.
But like the people that lend money out to people,
yes.
I meet a lot of real estate investors, and when you meet them, they always track the market. Like all the ups and downs. The lenders weren't tracking this, like saying maybe the market might fail.
Everybody,
overlend to people.
Everybody, the lenders, and I think the brokers and the borrowers, when money is flowing, everybody's happy. Nobody wants to.
Nobody cares.
You're on that you're on that fishing trip, and you're coming. The fall's coming. You're just everybody was having a good time, and everybody was making a lot of money. People were making money. The mortgage brokers were making money. They're spending money. Spending was rampant. It was just good times for all. But everybody was kind of in denial, and when it hit hard. I mean, it was just one of those things. Overnight, it all stopped. And then it affected commercial. We came after the fact.
So why did the residential market affect the commercial market?
Okay, well, by sheer nature of what they are, commercial is considered riskier than residential. That's just a fact. So when residential markets collapsed, commercial, everybody looked over at the guys over at commercial that were sitting there, and they said, oh my God, if residential's bad, you guys must be villains. And we got villainized, and that was the end of it. I mean, it was fear that killed us.
I mean, people that were funding, like the brokers, the lenders.
Everybody. The Fed, the market, everybody, all the lenders, when residential fell apart, everybody ran for the hills, and then they saw the commercial guys, all that money that was there and it was giving freely, everybody closed their doors.
Was given to lend out.
Given to lend out, exactly.
Okay.
That dried up in literally a day.
So there was no money to lend out?
None. It was gone.
So
Overnight.
that's why it sucked to be a small business owner.
Yes, sucked to be a small business owner. It sucked to be everybody because property values went down, jobs were lost, there's no lending to get out of the situation, so that's why the whole market and the economy has kind of crumbled.
You know, how are the banks funded where they can't lend out money?
Okay, where we are today is a lot of the banks, what people don't realize, a lot of banks are failing. The numbers are astronomical. It's 50% of banks are on the FDIC watch list where they're going to close theirs. Exactly. So a lot of banks are in trouble. They just don't have the liquidity or the cash reserves anymore.
That they're being required to have by the federal
They're being
government?
required to have by the federal government. So what has effectively happened, aside from a huge bailout of this mortgage problem of $800 million, or whatever this astronomical number is, the banks have been now given higher restrictions to lend money. So I'm a bank, and I lend to Mr. Business Owner here. I lend him $100,000. Well, my liquidity, the cash that I have to keep for that $100,000, back in '08 could have been $10,000. I need $10,000 cash to lend $100,000 because of insurance and everything else.
Okay.
Now it may be $100,000. It may be $200,000. So my liquidity requirements just to even lend this person money are so high, banks are getting pushed out on lending.
And by liquidity requirements, you mean that if a bank lends somebody money,
Yes.
they have to have that money on hand?
They have to have that money on hand, exactly correct. So one of the things that the Fed did to correct the market, they went after mortgage brokers, residential mortgage brokers, and really did a whole lot of weeding and put a lot of requirements and licensing in place. Good and bad results. I mean, you probably got a lot of people out of the business that shouldn't be in the business, and you probably hurt a lot of people that should have been in the business. They still got hurt in this. So the Fed, when they did the bailout, they put a lot of restrictions on residential brokers. Residential brokers got villainized.
The
in this.
bailout for the banks?
Exactly.
Okay.
So mortgage brokers really took the brunt of what happened. The banks got higher liquidity requirements and other regulations too, because banks are federally regulated. So the banks have all these guidelines in place. What's unfortunate is today, with all the guidelines that are in place, banks just can't lend to maybe the business owner who's been struggling over the past couple of years. Now, how many business owners have been struggling over the past couple of years?
Probably all of them.
Thank you. So, they're just getting pushed out of lending for now.
Why do you think commercial properties are getting into trouble now? Is it just because the banks can't and don't want to refinance them because they're liabilities?
Yes,
Or
there's a couple reasons. Again, this is one of the, like I said, the perfect storm of events that has kind of occurred in our economy. You have a business owner who's about risk, so if they took that leap, they're at a weak point until the business has been around for a year or 2 or 3, right?
Yeah.
So it takes time to build a business.
Yeah.
You're a business owner.
Yeah.
It takes time to build a business. You're at your weakest when you start,
Mm-hmm.
when you borrow. So you're at your weakest. So a lot of these business owners who started, they're at their weakest point. They get involved in an investment property, their commercial real estate. Now, instantly, people aren't spending, so their business is suffering. At their weakest point, the property that they bought for that $1 million is worth $500,000 now. So the property's not worth anything. The loan that they're in is wrong. So it was just a combination of multiple things that are hurting these business owners. So they're taking losses because people aren't spending.
But sorry to interrupt you.
Yeah.
They're also taking paper losses that you're allowed to take.
Absolutely.
So why does that hurt them? You're allowed to take that.
Absolutely, but the rule of thumb from a lender,
From a bank.
from a bank or
Okay.
from a lender, is there's two people when you're a kind of the joke when you know, as private lenders, is there's two people you pay when you're a small business owner.
Mhm.
You pay the IRS like we all do, and don't take any deductions that they allow you to do as a business owner. So you just pay them flat out and don't take any of the, you know, which would be insane. Why would you go into business?
Yeah.
Or you pay your lender because you're taking losses, and the IRS allows you as a business owner to take certain deductions. That in itself encourages small business.
Yeah.
Is that you get tax write-offs.
Uh-huh.
Well, that's the backbone of our country, and that's why the IRS allows, or the government allows, business owners to have a certain amount of flexibility. The only problem with that flexibility is it hurts them when it comes to the borrowing money from banks.